Hi, and welcome to Business 101 with Mareevuitton. I'm Marie, and I'm excited to have you join me. Whether you're just starting out or looking to sharpen your skills, this series is designed to equip you with the essential knowledge and tools you need to thrive, from basic terminology to starting your business. Covered. This playlist is comprised of my responses to the questions that came in when I posed the following. Give me 1 to 2 questions about business or tax that you wish you knew more about. In this video, we're going to go over itemized deductions and standard deductions. But before we jump in, a quick reminder, this channel is about creating useful content that educates its viewers, and the way we know what topics are helpful to you is by clicking the thumbs up button below and sharing this video with others. And of course, we'd love to hear from you, so drop your questions and feedback in the comments below, and be sure to hit the subscribe button to stay updated. I thought the easiest way to kind of explain or give some idea as to the difference between itemized and standard deductions, okay, would be to kind of outline it in this fashion, okay? You can only take one or the other. You cannot, claim both. So you're going to either take the standard or the itemized, and that's usually based on what's more favorable in your tax situation. So in through here for your filing status, it shows the standard deduction, okay, for you. And if you have children, that obviously changes, but we're just trying to simplify this in its most basic form. So these are the standard deduction totals. And if you were to itemize, okay, the things that are considered an itemized deduction would be medical and dental expenses exceeding 7.5% of your adjusted gross income. So you do have to know your adjusted gross income before figuring out which way you want to take the deductions, okay? State and local income and sales tax. So if you have large purchases, you'd want to save the receipts or documentation for that, okay? Even at a personal level, you don't have to have a business to do that. Property tax, that's very easy. We can find that on your tax assessor's website or tax collector's website, right? But we want to know the property tax paid in the correct year. Vehicle registration, at least when applicable. And mortgage interest for up to 2 homes only on the first $750K. $375 if you're married filing separately. Okay, and these are as of 2023. Okay, and your charitable donations of up to 60% of your adjusted gross income. What these numbers are here is I based it on having 100K of adjusted gross income, which is probably a little high, but for all intents and purposes, and to explain it, what this means is if you paid medical expenses of $7,500 or less, those wouldn't be counted. Okay, it'd have to be anything upwards of that. So if it was $8,000 that you spent, you'd get to claim $500 of that. Okay, as part of your itemized. So again, it's most important to check to see what would be in your best interest. And in tax, TurboTax, and some of those softwares for people that want to do themselves will show that to you. And then $60,000 is a max charitable donation based on 100K adjusted gross income. Not too many people are having to worry about that because anybody with that high may opt to do it differently. But this is the best way and most basic way to explain itemized versus standard. Okay, if you do not own a home or don't have any of these types of expenses, you're obviously going to stick to the standard based on your filing status. Okay, if you have these, you're going to obviously check to see what would be in your best interest. If there's any questions to what I've said, leave it in the comments below or email info@mareevuitton.com. Thank you.